Hello, mic test. Hello guys, and welcome to the 129th edition of the Trading Opportunities webinar. And hello guys, and welcome to the one. This is your host Nirav. I can see that the audio is working fine at my end. So in that case, let us proceed very quickly with the introduction. So as you guys know, this is the weekly series of the Trading Opportunities webinars. We conduct one of these webinars every Friday at 7:30 p.m. IST and 2 p.m. GMT. One second, let me get the drawing software before we get started with the stuff. And by the way, if you guys are listening me and are with me live, let me know in the chat. Well, I check my audio once again. Yes, it's working. Yes. So let's begin officially. So this is the 129th edition of the Trading Opportunities webinar, guys, and this is Nirav, your host. We have been conducting these webinars for quite some time, as you can see with the numbering of this edition. And one most important point, which is one second. The most important point is that in the last 128 webinars, we have captured a total of 323 trades. That includes 4 setups that were discussed in the very last webinar, which was conducted on 16th of April. Right. As we go over the webinar, we will discuss all the trade setups that we discussed in the last webinar before taking a look at the current market chart. And just to give a quick summary, our setups on EURUSD have been working excellent. Gold, I have already booked the profits. SPX is also closed in plus. Nifty also moved as per our analysis. And crude oil is moving as per our analysis. However, since we have not closed the position, we will look at it as not counted in this week and perhaps in the coming sessions. With that being said, let's run down to a few more things. Here's the quick forecast accuracy. I've been conducting these webinars and other video uploads for quite some time, and what we have done here is compiled a track record of all the things said publicly on YouTube. And you can see from 2016 we have had a consistent accuracy of 80% plus. Previously, these webinars were conducted on a monthly basis till 2021, after which we started doing them on weekly basis. And on weekly basis, we already have shown the track record of 323 trades in the last 128 webinars. So this stands as a public record. Anyone can verify it. Everything is done publicly in front of people, and exceptionally high. I believe it beats all industry standards, and that's about that for the accuracy of our past work. In case you guys are interested in learning more about my work, check out the book on Amazon, available via the ebook Kindle edition. And also, if you're interested in learning more of the stuff, then you can check out the video course listed on the website here. It has 1600 plus students. In case you are not completely committed thus far, you can always have a look at the free course, which is a collection of 13 videos from the main course, available for free without any registration. The link will be in the video description and will also scroll at the bottom of the screen in a moment. Well, with that being said, we are now all set for our actual webinar. So let's begin with a quick rundown of how things will proceed. First, we'll discuss the chart of crude, followed by gold, S&P, Nifty, and in the end, we'll discuss the chart of BTC. Every time I make a chart discussion, you will have the opportunity to type anything in the comment section regarding the discussion, and we can have a look at your doubts or questions. So here is the first chart on screen of EURUSD from our last webinar. Let's see what was being said in the last webinar and what happened later on. So I'll quickly play the video. This was conducted on 16th August. And as you can see, our setup or expectation was that this market is in an impulsive movement, and we have at least two waves remaining to the upside. Let me just pause this video. So this was the rough idea, and the market at that time was trading. Let's zoom in and see at 1.09917. And let's see what happened afterwards. Keep in mind, guys, we were already holding longs on this counter, and let's see the actual chart here on screen now. So as you can see, 1.099 something was the price level, 16th August. So basically the market was roughly here when we did our last discussion. And since then the market has gone up significantly. As such, this is a 4-hour chart. So I'll show you the percentage movement is 1.56%, roughly speaking so far. And I'm personally thinking that it has two more legs up remaining, including the one which it is in right now, and then there will be one more. That's the expectation. So long story short, we expect at least one leg up, which will take out this high of 1.11755. So my current positions are all already trailed the stop losses above entry. So we are in a free trade now. I think we have updated it already. So let me just show you on the Slack. So here is the Slack group where we post all these market analysis and updates live. Let's see. Expected progression, updated count, and stop loss moved to 1.10641 above entry in free trade now. So we were in a free trade on August 21st. So 2 days ago itself, we moved in a free trade. Now I'll continue to trail it further as the market moves in our favor, but just wanted to show you the quick update there. As far as the targets are concerned, I do not have any target. I'm thinking of, I mean, of course, I can find some targets, but I'm thinking more of trailing this one and letting the market do its thing, right? So, just a rough idea I wanted to give. Our immediate target is coming around 1.124. So that's the rough target level from the very quick outlook we have via the orange channel. And as far as the count is concerned, we are simply looking at an impulse, and within the impulse, we are in the wave three. So extremely strong up moves are possible because that's the characteristic trait of wave three. So I'll continue to trail. As mentioned, we are already in a free trade, so targets are not very important. It's more important to just ride it as much as we can. With that being said, I do not have anything much to add on EURUSD now. If you guys have any doubts or questions, you can just post them in the live chat if you are live in the webinar. And also do not forget to say hi or a hello. I can see a lot of people are live here, but no comments here. In any case, I'll just move over to the next chart of crude oil. So here's the recording from last webinar. Let's very quickly look at what was being discussed. So here is the rundown. I had mentioned it very specifically that while we were holding shorts on the counter of crude oil, as discussed in the last webinar, we were still not very interested in creating new positions because this market had 2, 3 different variations it could take. For instance, this triangle possibility was the main count we had in mind, expecting that the market will continue the sideways congestion and then break lower. Let me just play this video. Yes, so this was the main count. However, there was also the possibility that the market can just propagate within this boxed range. So hence the idea was that we did not want a big exposure or any new positions. It was a low probability scenario. However, it does look at this point that this triangle count has actually played out. So let's look at that with the crude oil chart now on screen. So 16th August, let's move the chart here somewhere. So the market was here when we did our last discussion. And as you already know, the idea was that this market will continue lower in case it's following a triangle. Otherwise, there are a few other possibilities remaining. So far it has done the expected. It has moved lower in accordance with our count. Now the bare minimum we want it is to break the low lower than 72.299. So this market, once it goes below 72.299, we will have a stronger confirmation that this market is going as per the triangle count. As far as the current outlook is concerned, within the triangle, we expect this market move to be in wave D. And within the wave D, we are expecting a zigzag, possibly with the first leg here and possibly the B wave here. And hence, we expect the C to take out the last known low of 72.34, let's say. So if it goes below that low, it will complete the minimum expectation, which is the market going lower than the, actually it has already gone lower than the wave A low, but the minimum expectation in sense that it should have a clearly defined C wave, which generally means that it goes much lower than just the 1 or 2 pips, right? So that being said, I do not still want to add any more positions. The last position I have is still on, and it was in loss for quite some time. It tested my limits and risk management, and that's why I'm just avoiding anything new in crude oil. But the current position I'm holding with the stop somewhere around 79.3 level. Basically, this high, if it breaks, then I do not want to hold this position any longer anymore. And as far as this current count is concerned, once this wave C is complete, we expect some more, upside movement as a correction and then follow through to the downside. So overall, at this point, it is bearish from a swing perspective. If it breaks the level of exactly 80.2, then that will suggest that something else might be going on, and at that point, we may look to consider some other possibilities. But so far, it is moving as per the triangle count. So let's just continue with that. Next up is the chart of gold. Again, if you guys are live here with me, do not forget to say hi in the live chat. However, if I'm not seeing much participation, I'll just continue faster. So, gold. Actually, gold was an interesting one. I did even post a live on TradingView. So let's check and start our discussion with that. So this live chart was posted on TradingView, as you can see, 4 days ago. At that point in time, the price was around 2506. Not sure why it's not showing the count. That is weird. Why is it not showing the counts at that point in time? Anyways, here's the commentary. We were expecting a wave 4 correction is either complete or continuing, and then the market will go to 2513. And the market did go to 2513. So it was very short term analysis. Did play out as per our expectation. And just wanted to show you out of the ordinary stuff. I rarely post on TradingView. But anyways, hello Raghu. Nice to see you here. So getting back to our quick rundown of the chart, I just want to show you first of all the actual discussion from our last webinar. So here's the recording from last webinar. Let's check what was being said on gold before proceeding with the current chart. So here was the outlook, and I do specifically remember our setup basically was I was already holding long positions. We did not want the market to go and sustain below 2480, roughly speaking, this blue line basically 2481 it is. So, and I also do remember that the market did give a spike. By the time the market the webinar was completed, the market did give a spike below this low. So anyway, the idea was that the market should remain above or sustain above 2481, can go sideways, but eventually it will go up. And as you see, I have also publicly posted the target was 2513. I don't know the actual targets in this because this discussion was 7 to almost 16 something. So very lengthy discussion. I do not want to waste time and check the targets or anything, but it's quite evident that we are looking for 2510 plus levels. I already have an alert here. Now let's look at the actual chart. Keep in mind at the time of this discussion, the date was the 16th of August and the price was 2483. Now let's look at the live chart and see what happened here. Here's the gold chart on screen. Let's go to 16th of August. 2483. 2483. So this was the price at the time of discussion. Yes, this was the price. And 2513, whatever that is, was already touched, achieved the upside target, and then has given correction. So basically, my point is that from here to here, we have already caught a move here of 45-ish points. Of course, all of this was posted live in our Slack group. Here is the gold channel. Let's see what were the posts very quickly. So 21st impulse looks complete. Can take the market into a corrective pattern. Okay, now this is the latest one. We want to check after 16th August the trades or position we have taken. Added minor longs, stop loss 2475, target minimum 2509. So this was possibly a short-term trade. Added more longs, booked partial profit on longs. Let's see further. Again, trailed the stop loss to 2520 for past position. So we had basically two positions going in. One was a swing long, which we are still trailing, and the other one was the short-term position, which I had shown the entry as the first post in this channel right now. And so on and so forth. I still was having some positions still here, I think. Yeah. Book profits on remaining longs. We'll look to re-enter once the correction is complete. So we closed with all our profits, including the swing positions, which we have been holding for more than a week at 2504. So at 2504, our last positions were exited because we were expecting a correction which could take the market to here or here. Let's see if those mentioned levels are also listed. So these were the level 2492 and 2470 to 65. So this was all posted live, and obviously you can find details for all of it in the scrolling section below. You will have to send a specific request. Anyways, getting back to our analysis, I'll just quickly refresh it. Sometimes it just shows the old trend lines and drawings. I don't know why. So yeah, so here it is. Expectation was either the market will reverse from here, this yellow circle, or it may take one more dive deeper before going up. Obviously, it is moving up, and actually, I should enter some short-term longs on this counter. Probably will do it near the end of the webinar or after it's complete, as our last alert is 2526. So above it, definitely looking for re-entry of the longs. So yes, so now the count on this is quite simple. As a matter of fact, we are just looking at an impulse. I will not go into the complete long-term count. Here we are just going to check the 5 waves up. Let me just quickly mark them and then explain them so that everybody who is even not familiar with the Elliott Wave can understand. Right. Okay, so in Elliott Wave technology, the 5 wave progression up like this is called an impulse. I'm just giving a very rough outlook. There are many rules, guidelines, etc., associated with these things. Now, the main thing is that whenever the fifth leg is complete, we expect at least a 3 wave correction. It could be in the form of a stronger down move or kind of a boxed flat correction. In this case, it's looking like possibly a zigzag. It could still continue, but let's just assume that this is just completing a first wave of a higher degree. So because Elliott wave is fractal in nature, so 5 waves complete one of higher degree, and similarly these 5 waves, if you look inside it, it will have 5 waves of a lower degree, something like that. So the structure keeps repeating itself within itself. Again, as I said, if you want to learn more on it, there's a free 13 video series available. Link for that is in the description, and it does not require any registration, so you can just check it in your own time. Getting back to the analysis, the idea is that once this three-wave correction is complete, we want to see the market go up, and the setup generally is that conservative setup is that you wait for the break of the last high or the market to go near the last high, which in this case comes out at, let's see, around 2531 level. So above 2531, the conservative setup for long becomes active. Keep in mind, if this market is continuing within the circled wave 2, which we are assuming may have completed here, then there is a distinct possibility where it can actually go above this zone and then lower this zone and then up again. So it will, in that case, fire breakout longs, their stops will get triggered, breakout shorts will get entry here, and then their stops will get triggered before the market takes off. But that is a bit of less likely scenario right now, but just keep that in mind. So anyways, main theme here remains the same. If you are looking for longs, keep that scenario in mind, and stops will have to be wide, positions will have to be from a possibly swing perspective. So either straight up, or we can say with the secondary possibility, some sideways and then up. So these are the two main hypotheses. H2 is suggesting some downward movement before the market takes off, and H1 is suggesting straight off upward movement. That's our take on gold for now. And immediate targets, again, keep in mind from a longer time frame perspective. Oh, nice. There's one thing I have to point out here. Again, guys, why is their participation so low? Is my audio even going there? I have no idea what's going on at your end, guys. Keep in mind, these are conducted live, so a little bit of feedback is always nice. Okay, so the new point which I want to point out here is quite simply that we have a test of the BD trend line, almost a test. It almost touched the, actually, if we draw the trend line properly, I think it has tested. Yes, it has. So double bracket B and double bracket D, and you draw a trend line from double bracket B to double bracket D, you get this yellow line. And generally the trade setup is that we want the market to test it and then head higher. This gives you what you call a classical price action trade setup. And in Elliott Wave, it will be a triangle break, retest of the BD trend line, and then up. This was actually discussed in the last webinar live. I had discussed the major idea that we want to see a leg down. I don't recall, maybe it was some meeting with somebody, but I had discussed this idea specifically that this trend line is expected to be tested. Anyways, so it's tested. That means this setup is exceptionally strong, at least from the looks of it so far. So keep in mind the targets are kind of pointless at this point. This market is in ultra bull mode, so it can just go anywhere. Hello, Matthew. Thank you for the comment and confirmation. Thank you, Jill. So yes, as I was saying, this market is. Let me show you on the daily chart. Actually, that will give you a better picture. So here it is. Congestion. Actually, congestion zone was extended. This is all sideways congestion, and now it looks like this market is breaking above it, and then it will go up. Now, why have I drawn the box like this? It's not random. There are reasons for it, and why I'm only checking this leg and not others. Again, there are all reasons for it, but let's not get into all that. It's basically suggesting that this market is now into uncharted territory, and it will not be a surprise if it goes to 27, 28, even 3000 from here, because this is in ultra bull trend right now. So that's why not much interested in targets. Probably we will discuss some later on, but trail is the kind of trading logic we want with these kind of markets. Okay, nothing much to add here. Above this PD trend line, yes, 1 point. If the market at any point comes back to retest it, that's fine. Like for instance, the market can do something like this. That would still confirm bullish trend, testing the trend line here. Let's say the trend line is this. But if the market goes below this trend line and sustains below it, like if it does something like this for a period of time, we are on the early chart, so this much would be enough, a few hours. Then that would mean that probably something else might be happening, and in that case, we will prefer not to, continue with this analysis. That's about it for all this setup on gold. I think we have discussed it in quite detail. Okay, 1 second. Let me know if you guys have any doubts or questions on this chart. If not, you can just type in clear or understood in the live chat. And let's now head over to our chart of S&P's 500. Looking at the discussion from last webinar, let's see what was being discussed in our meeting on 16th of August, and what was the theme or the trend on this counter. Thank you, Jill, for the confirmation here. So here is the chart from our last discussion, 16th webinar, 16th August webinar, number 128. And keep in mind, guys, this is all public record. You can just go 50 Eyes Market Analysis YouTube channel, click on live, go to the 128th webinar, and everything is timestamped. So it's all public record. So anyways, the setup was exceptionally clear. How much more clear do you want? The market is taking support at the wave 4 intended support level and expected to go higher. And what I'll do is I'll play the video a little bit. Yes, so we were expecting 2 legs up. I have clearly mentioned it at this point around 21 something. You can check it in your own time because this is again a lengthy discussion starting from 16 ending around 23. So we don't have 7 minutes to check this whole video. So the idea was that it will go up for this double bracket 3 and then double bracket 5 minimum 2 legs from 5544. So 5600 plus obviously. I don't remember what's the exact target. Let's check if we have mentioned anything. Yeah, these were the 2 legs you can see with these yellow arrows. And conservative setup was 5557 plus longs. Right. Enough of past data discussion. 5540 was the price at discussion, and now the price is around 5627. This was the point in time when we discussed this leg, around here somewhere. And as you can see from here, this market has already given us a movement of total 100 plus points, roughly speaking, and a clear move of 80 plus 86-ish points. Right. So this has again worked out, and obviously we did update all this movement and the intermediate legs as well. This wave 4 down and everything else was obviously updated in live. And again, I had corrected this trend line or arrow, but drawings sometimes don't get saved here. So yes, now our view on this chart becomes that we are expecting this market to give one more leg up at the bare minimum. That is, if the circle 3 is coming in here, then some sideways movement and then up. Again, that's the most conservative setup. I do not think circle 3 is complete here. That in itself will be not representative of this bullishness. So far, the count will be something roughly speaking like this. While I do update this, very quick request to those of you who are watching live as well as those who are watching the recording later on. If you're liking the content, do not forget to hit the like button and of course share it. Keep in mind, we have been doing these webinars for a very long time. This is like 129th edition and still our views are stuck around 500 to 1000, which is not very cool. And if you want to see these regular webinars, then continue to show your support, guys, and share it in the forums online forums, your Discord channels, WhatsApp channels, or whatever social media you are using to connect with your trading mates. So, anyways, now that we have the whole count on screen, the idea is that we expect at least one leg for this circle 3 and then one leg for the circle 5 if this count is correct. Obviously, if the market goes below anywhere below 5563, actually it can go below 5563. It can go to around 5520. That's why I don't have any alert placed here. So basically the theme now is if it sustains below 5518 is the actual level, then it's definitely not doing as we expected below 5518. Keep that in mind. And as such, I personally think it should actually not even go below 5566, which is this recent low. If the trend is strong, it should just continue up from here itself, right? So that's about it for S&P. We expect upward movement to continue, and possibly I will probably look for some short-term longs above the last high, which is around 5647. Keep in mind the data feed we are using is on the top left here, and if you are using a different data feed, then the prices will be a little bit different, right? So keep that in mind when I place my alerts and tell price targets or levels. So that's about it for our discussion on S&P. Some further upward movement is expected to continue on this counter, and breakout longs is the main theme for the play. Do let me know if you guys have any doubts or questions on this discussion. If not, we'll now head over to our next chart of Nifty, which will be followed by the chart of Bitcoin, the last chart which we discussed. So here is the discussion from our last webinar on Nifty 50. Let's see what was being said. Let's move this webinar a little bit forward. Obviously, this was conducted on 16th of August. You can check all details here, the date and the time, etc., etc. 6 days ago, streamed live. And the main theme was, or is represented here, is that we want to see market sustain above 24,592 plus levels. When the market sustains above 24,592, then we will consider long trades on this counter. Otherwise, it was a bit unclear one, right? Although it was showing bullishness, this was the main level. So at the time of discussion, the market was trading around 24,539. So almost 60, roughly speaking, 60 points away from the level, marked level. So here's the chart. Now the live chart, as you can see already, the market not only did go above 24,590, it did show this sideways congestion range around 24,586, 88 level. So this is what we really wanted to see. Market did give us that, and after that, it has just continued to go upwards. So what we have here on screen is the expected impulsive count is what I'm going to discuss, and there are some what do you call complex counts which we do not have on chart here, and I'll kind of avoid them because I don't think many of the audience here would be able to grasp it. So to keep this strong and simple, here is the 3 wave, here is the 4, and we are expecting the 5th up. So the expectation is that it will go and at least test this high, which is what, 25,082 something, right? And most likely break it, right? And here is the second possibility. If it just tests it, then it can also become a bit range bound. The range is pretty big, as you can already see the whole leg from 25,074-ish high to 23,892-ish level. This is all a big sideways possible range. Do not think that's what's going to happen, but definitely it does look like this level can act as a resistance. Obviously, it's a lifetime high, right? So also, secondly, I think this count may not exactly have the 3 here for certain reasons, but in the longer picture, it kind of does not matter. I have 2 3 alternates, but in the longer picture, we are expecting a leg up testing this high. So it doesn't really matter which count we put on the screen. So long story short, we look for breakout longs and longs above what you call 24,853 level. We expect the market will go up, and this activity is having multiple sectors engaged. Specifically, the auto sector is engaged. We have already figured out the trading opportunities in some of the auto stocks. Specifically, Bajaj Auto, we have been tracking it for quite some time. But then, anyways, we have all that posted in our Slack group, and I do not discuss specific stocks in these webinars. So, long story short, we look for short-term breakout longs above 24,865. And we look for test of the last highest 25,030 followed by 25,080. And obviously, we expect that this level will be taken out, the lifetime high will be taken out if this trend is strong enough. Anyways, not to bore you guys, since there's nothing much to add, we'll now head over to our last chart of BTC. And obviously, if you have any doubts or questions related to the discussion we have done so far on this chart, you can just let me know in the live chat. So in the last discussion on BTC, there was not a very clear trend. Let me see by moving forward. Yes, so we were expecting ABC, possible sideways Forex, maybe further continuation down for correction. And the second count was that this C is complete here and this market will go up. We did not have confirmation for any of these two possibilities, so it was a wait and watch market. Let's see now if we have anything new on the chart of BTC. So right now what we do feel like is that it's giving a corrective leg up from this level of price around 49,544. So perhaps correction, sideways, and then correction. So basically it's again a breakout kind of setup. We can look for scalp longs above 62,675, but I do not like this market for scalps that much, mostly to do with the brokerage and other charges from other entities. Anyways, so the setup is kind of very simple. The market is expected to remain within this box range. Once it sustains above the box range 62,896. Keep in mind, my data feed is this. If you are using a different data feed, your price levels will be a little bit different. So in this feed above 62,896, we expect at least one leg up. Generally, we would want to compare this leg and this leg in size or price movement actually. And since it has gone from almost 50,000 to 62,000, so that's about 12,000 points. However, in this case, we'll just simply project this percentage measurement from wherever we expect the wave X low, and perhaps roughly speaking 20 to 25% movement from this base level of, let's say, around 56,000. So it's giving us a rough level around 70,000, mostly telling us that it's kind of going to go and test the last high because it's coming around 72ish level. So that's about it for our quick take on BTC. Scalp longs are possible if you are interested. That's the trade setup, and I've discussed everything. And obviously, if the market triggers the upside, the stop loss actually becomes 50,000 because that's a technical low and that's a very wide stop. So this trade is quite a risky one, I would say. With that being said, we have discussed all the main charts which we discuss in all these webinars. For those of you who joined in and stayed till the end, thank you for your time and energy. And obviously, again, if you guys are enjoying the content, do not forget to hit like and much more importantly, share this content. It's been what, 9 or 10 years of doing this, and this content has still not gained traction, even though I'm probably the only few guys who have a public track record. So who knows what people really want. Right. Anyways, thank you for staying till the end, guys, and listening to my jibber jabber. I'll see you guys in the next one. Take care. You're most welcome, Jill.